Eric Muadid, Muadid.com. Let's take a look at the Russian ETF that trades in the US, the RSX. And here on the weekly, looks like it is breaking out above the recent late 2015 weekly closing high. So as long as it is holding above 16.96, which is this weekly closing high, the ETF might have a chance of moving higher. So that looks like a potential breakout. But if you look deeper into the chart, you might run into some problems, especially on the weekly, on a long-term picture. So let's take a look at a 5 to 8 year weekly chart. So this is 8 year weekly going back to 2009, and we can see that there was a break here, this trend line break in 2011 brought the ETF off the highs there. And if we draw a line, it should be something like that. We can see that over the last 4 or 5 years, every time we hit that line and stall, we record a high in this instrument. Double top here, beginning of 2013 for the highs there. Uniform activity here, rejection for the highs here. We touch that line for the highs there, and on and on. And most recently in 2015, same thing. And we are coming back to test that same level here in 2016. So clearly the stock needs to clear that resistance, otherwise it could fail around here. Also take note of the fact that if you take the highs of the RSI, something like that, you can see resistance. In fact, let's take a look at a clean chart. Just take a line connecting RSI highs like that, and you can see right now the stock needs to continue trading above that resistance line on the top side. Otherwise, if it moves back below the blue line with uniform action, this could be an area that could be a trap. In fact, if you take a look at the daily is showing a couple of things here. We have improving price highs with declining RSI technicals. In fact, this line happens to also show that the stock hit that same line twice, so that's a double top on the negative divergence line, which could begin a pullback in the stock. And there's also another line going back to the highs of 2015. If you take a look at this break, the break brought the stock off the highs of 2015. Draw a line from there, and you can see that we've stalled before on this line with a double top right here, uniform activity rejection for the highs here, and then also we've come back, we failed here for those highs. Now we are coming back, failing again with that double top. So those two lines could present a problem for the stock. And the way things are setting up here, one can see that with the negative divergence, lots of red flags, and so negative divergence here as the stock was making new highs. Keep in mind that we took a look at the long-term chart here on the weekly. We are seeing resistance either on that line or on this line. Net, the stock has a lot of resistance levels to clear. For now, it would not surprise me that around here, this move that is a breakout is a trap and the stock pulls back. Otherwise, the best thing to do is watch the breakout on the weekly above this level here of 16.96. Anything above that is showing a breakout and the stock could do well, or the ETF could do well. Otherwise, if for some reason it cannot hold and it moves back below 16.96, then that is going to be the confirmation that the stock is running out of momentum or setting up to pull back. Eric Muadid, Muadid.com. As always, good luck, peace, and blessings. E-A-C.